One, two, three, go. Let's get going. Happy Tuesday, everyone. Welcome to our Cake DeFi space of the week. We're going to have quite a few exciting topics. Going to talk about what's been happening over the past week at Cake DeFi. Actually, quite a lot has been going on. So, quick summary of all that, promotions that are going on, updates that are happening. Also, one thing we are going to do is if you're watching this on YouTube, you're going to just look in the description. We're going to try to have as many links to the articles that we're discussing, links to what's happening on Cake's ecosystem. So you can click the stuff right through. On Twitter, we may also have that as various tweets under the Twitter space. So I'm going to try to figure this out. So we're going to do Cake updates. We're going to talk, obviously, markets, what's going on there. We've had a crash on Friday. Weekend then been relatively calm. General markets been selling off on Monday. The crypto market was relatively cool about that. So was that it with the bull run? So we're going to discuss this. We're going to discuss Ethereum staking because there was quite a lot of discussion points on this in the markets. And also, we are going to offer Ethereum staking on Cake DeFi. So, obviously, want to talk about that. And then let's see where this takes us. Obviously, Tether may be a topic. We're going to be mindful of time as well, but I think that's definitely going to be a topic. We've had quite an impressive talk of Prime Minister here in Singapore. Would love to pick out a few points there. What does this mean for Cake DeFi as a headquarter here in Singapore? I think this may be also interesting to some of you. And then we can see. Obviously, we could talk about NFTs. There's been quite some debate going on there. We can discuss about the housing market maybe having some issues and really kind of collapsing the entire market. But that's all kind of a bit further down the line. So let's see how much time we have and to all the exciting topics we get to. As always, if you have questions, then just tweet at us and we can just always respond, obviously. With that, I would also love to intro our.
Hey, Julian, I
Yeah.
lost the audio on Twitter, so I don't know if you changed anything.
Nope. But here should be working, and I can hear you as well. It says that it should hear me because otherwise there wouldn't be the sign. Can you send me a signal, Ewald or someone or Arba? Can you just show me a signal, thumbs up, or can the community just give me a thumbs up that you can hear me? Or an okay sign or something as a emoji. Otherwise, nope. Arba says it's fine. So Glenn should be okay, hopefully.
Yeah, back now. Thank you.
Okay. Yeah, with that, we don't have Fabio. He's listening in to the Twitter space, but he's actually on a well-deserved holiday from all of you. You've been bugging him too much, so he needed some time off. He just had his regular summer holiday happening. So we actually have our Chief Operational Officer here on the call. And I think it's a great time also to intro him to you. I think you're going to hear him more often. And so with that, Glenn, please take the stage. Spend a few minutes on introing yourself. What did you do prior? Obviously, I mentioned already you're a Chief Operational Officer. But maybe a few things about you. And then we're going to dive into the nitty-gritty parts of all this.
Super. Thanks a lot, Julian. Standing on the shoulder of a giant here, Fabio, legend in the space. So trying to fill in as he's taking a break for the next 2 weeks. So I recently joined Cake 3 months ago. Role is COO.
Past
That means
probation.
past probation. Still here. And trying to optimize some of the internal workings of the company. So as we go from startup to scale up, there's a few more structures that we need to build, a couple of teams that we need to build out. So focusing on the internal operations, the fund management, HR, data, and everything in between, like our KYC process, product analytics, trying to build really the foundation so that we can be more focused in terms of how we scale and how we grow. Prior to this, I spent 7.5 years at LinkedIn. So Web 2 to Web 3 was my move recently. At LinkedIn, I was in charge of a team that was taking care of outsourcing of all sales-related activities globally for LinkedIn. So we were setting up new sales teams outside for the advertising business, for the talent business. And so we were taking care of the accounts that were either being nurtured or that had to grow, and all of the back office work. So all of the stuff that the salespeople didn't want to do, we try to take off their plates and put that outside with vendors. So in that 7.5 years, I spent a lot of time hiring, spent a lot of time building structures. I had a data team, I had an automation team. Program management had to be very strong to make sure that all of the metrics were good. And so I think a lot of those experiences, a lot of that skill set I'm trying to bring into this new role here at Cake, making sure that we scale as efficiently as possible. So yeah. A bit about myself. I'm from Belgium originally, so close to actually where Fabio lives in the Netherlands. Spent the last 12 years in Singapore, so moved here in 2010. So permanent resident here. Hope to stay here for a very long time. It's a really enjoyable place coming from Belgium. Low taxes, nice weather, great commute, and really great travel to the local scenery in Southeast Asia. So yeah, I'm a fan of Singapore as a place. Yeah, that's me.
Yeah, and definitely it was really good to have someone of your caliber on. Yeah, everything that's operations, processes, customer success, community also. So Fabio, customer success, all of that goes there. I think Glenn has a very strong understanding for the product on one hand, but also for the user. Works with me really side by side to make sure that yeah, everything is really well taken care of. So that's really good. Especially on the data, I think that's something we have good steps to do, and so that's really nice. Great. Then I would say let's dive in. Want to spend a couple of minutes first on actually talking about a couple of the updates that you've seen, or maybe you have not seen them. A few, again, I'm going to go through a bit quicker. A few I'll spend a few minutes on. Again, on the YouTube video, you can find the links below. On the Twitter space, we'll also post the links below, and so you can then just check them out and have a look afterwards. I think two really nice articles that came out for like media articles. One is here about our Q2, which definitely was an amazing quarter for us, considering how difficult it was for so many other companies. We paid out $58 million in rewards, companies cash flow positive. Like simple key question, right, to everyone. Which crypto company do you think is still cash flow positive in Q2? And again, I want to be very transparent and open. Q3 so far is like super razor thin. So it's going to depend a lot on crypto prices. So I don't know, maybe Q3 we're going to be cash flow positive. We may not be. We have enough treasury, but it's like really razor thin. So, but how many companies are still cash flow positive in Q2? So you can, I don't know, just think for yourself on this. The other article that here I think was quite interesting was the one from FTX. I looked at those numbers, yeah, because they came out. I think they had a profit of $270 million in 2021. I don't want to reel our numbers again. Maybe at some point we're gonna publish them. But to me, what I was really proud of is actually our profit in 2021 is not so far off from that. So I don't know, Glenn. Did you look at some of the? I don't know if you checked out the article on this. I just thought that was quite impressive for us to see a bit there.
Yeah, definitely did. I was also surprised at the low base where they came from. So if you see the rise of FTX is super steep. So it's not like Coinbase where they were building for years and years. So FTX revenue in 2020 was a whole lot lower, 1,000% growth on that revenue number. So I was amazed at the level of scaling that they put in place. So that was quite impressive. So you can only imagine what it would have been like on the inside, trying to scale all the operations and hiring enough people, dealing with their regulatory frameworks, all the while SBF is sitting in Bahamas, nice and cozy. So,
I really would have not
good gig.
thought that. I really would have not thought in 2019 that there's actually space for an exchange, and yeah, FTX I think proved everyone wrong that. So kudos to them. Well done. Yeah, a couple of other things. Tech in Asia article, I think a really fantastic article. How Cake DeFi is beating the crypto winter. Linking up below. Really nice. I love that unicorn story. Um, yeah, I really really nice. So have a read. I think those two articles, yeah, kind of come to mind on the media side. A couple of other things. Blog post is out on why we need Bitcoin. I think a big reminder in a lot of this craziness. I know sometimes mistakenly people always feel that I'm not so bullish on Bitcoin. I even got to ask this once internally in the company during a town hall session. I actually am super bullish on Bitcoin. I own Bitcoin. Bitcoin is the largest crypto position we have in the company. So I want to be very clear on this. Just because sometimes I talk about Ethereum or I talk about DeFi chain or other coins doesn't mean that I don't like Bitcoin. So um, good blog post here from the content team. Have a read. I think it's really nice. Big achievement. Initially, I wasn't sure if I wanted us to actually post that because obviously that's part of our audited numbers. Hitting 1 million customers plus now. That is big. I always think like that million is always key. And yeah, and, the reason also is now that you know a little bit on the percentages. So when I talk about that, I know we're growing by like 7% week over week, which really is like a number we're doing at the moment. Like we're growing massively week over week. These are numbers that are as strong as I don't know ever before. Like literally in our entire history, the entire like the growth we're seeing right now, I don't know. I haven't seen that growth. I think there were like 2 or 3 weeks where we have seen crazier growth. And one was like, I think there was 1 week in April this year that was just nuts. And then like there was a week last year where again it was just super nuts. And that was it. And obviously a lot of it sadly has to do with companies going bankrupt, insolvent, and a lot of them coming to us. We gladly take you and hopefully we can do a really good job in providing a great service. And then I think it's also the marketing team has done a good job. Product is cleaning up with everything. Um, yeah, so welcome all new bakers and really good to have you all. So that's really nice. Our Razor promotion finished. Great partnership. Let's see. We are looking into more things here. Hopefully, we have some really exciting stuff here for you as well. So keep a bit on an eye on that. The promotion is still going on. You can redeem your silver points, but we had this additional sign up promotion, and so now you still claim it. If you are using Razor Silver, then check this out. Definitely great. Um, Two Ethereum updates I quickly want to mention. We're going to talk about the Ethereum Merge afterwards as well. We have dropped the Ethereum address creation fee to $0 if you make a deposit of $1,000 or more. For those of you that have been wondering, why did we have a fee there? Actually, all the exchanges and platforms have to pay a fee there because all of that is managed via smart contracts. It's very different to how Bitcoin is managed. And it was just absolutely ridiculous. And since for us, our business model is not a black box, it's actually completely just aligned on the blockchain side. We just had to forward that fee to you. Now we dropped it to zero just because also the fee on Ethereum has dropped. So if you deposit more than $1,000, then we're gonna completely set that fee to zero. That brings me to a second point I wanted to bring. Let me quickly show you, not the hiring side. Where's that link here? If you look for something, you can't find it. Ha! Where is it? My goodness, how difficult is it to find that exact thing what I was looking for? I wanted to find that blog post about, okay, I somehow, here. Okay. A lot of questions on the Ethereum merge, how this is affecting customers at Cake DeFi. So just want to point this out. We are supporting the main chain on the Ethereum fork. That should happen in 3 weeks, which is the proof of stake chain. Very likely. At this moment, we're not intending on supporting any other fork. Obviously, if one of the other forks, especially if there's a proof of work fork that gains significant traction, then we're going to support it as well. And you should also then be able to claim your coins. Again, there's no legal promise on that. We're going to keep an eye on it. And we actually don't know if there's anything that's actually going to come out of this. But so just we want to be very clear. So if you have your ETH with us, you should be doing fine. A lot of questions on that. So if you want, just go on that blog. There's the entire kind of explainer on this. Yeah, sadly, companies going still insolvent, hodl not, laying off a lot of people. We are trying to reach out. Obviously, we are hiring aggressively. If you want to take a look, here is a quick overview of our new office. Glenn was significantly involved in helping picking that space, finding that space, and it's right in the center. I don't know, Glenn, maybe you want to share a few thoughts on picking that space. What came to mind for us? What were key thoughts?
Yeah, sure. The search was more difficult than anticipated, to be honest, because we thought that the economic downturn would free up a lot of the spaces. A lot of companies are now working from home, hybrid working. So we figured, finding an office is going to be easy. It took us 4 months to actually land on a place because landlords were seeing a whole lot more requests from companies who wanted to expand or downsize and wanted to keep moving into new spaces. So have to give kudos to Jacqueline on our team here, who led the whole search and was crucial in finding the right space. What we were looking for, something relatively central, so that people don't have to commute too long. Food options nearby, really important for Singaporeans, but also a space that would allow us to be flexible in the next couple of years. So as we grow, like our base in Singapore is now 85 people, we want to grow that to 100 and then continuing on from there. So we need a space that can grow with us, a bit modular, and a space that allows for both the focus on engineering, if they need a focus space, and then all the rest of the company if they want to be rowdy, plus our town hall space where we want to get everybody together. So it needed to serve a few functions, but all in all, I think we landed a very nice location. So happy that it's signed and anticipated moving date probably sometime November. So a couple more months. It's going to be nice.
Yeah, definitely. And I mean, I think it's also a good time maybe to quickly talk about uh, Singapore Prime Minister announcement over the weekend. I thought it was, I spoke with u-zyn as well on Monday morning. He said it looked very Apple-ish, very kind of futuristic. I was very impressed from how the government has been kind of navigating everything here. Looks quite optimistic to me. Very like long-term thinking, something that I always appreciate. Obviously, we always have these discussions. Does it make sense to have the company headquartered here? Should we move somewhere? And I don't know what your thoughts have been, but from my side, I'm actually super happy right now where we have the company. I think it's going to be a very good place to attract talent, good quality of living. Seems very stable, very forward-thinking. Yeah, I don't know if you had other thoughts on that or additional thoughts, but I thought that was a good kind of also add in. Yeah, I'm gonna link it up below if you want to read the summary, but that was just key, I think.
Totally agree. I attended a lunch today with risk professionals and people who focused on internal operations, banking, fintech, crypto. And while we all agreed that this was very difficult nowadays, especially with a lot of fraud attempts, a lot of need for technology, a lot of need for very good risk frameworks, we all agreed that Singapore government is probably doing a very good job in just engaging with companies and asking questions and understanding the businesses. We've also, I think, noticed this in licensing process where they actively engage in conversations with the companies, really try to understand the business model. How do you make money? How does it work? What is the future growth for the company? So really, I would say impressive in terms of the depth that they go to really understand and make sure the industry doesn't fall down on its knees as a couple of the players are collapsing. So yeah, positive, very positive sentiment.
Yeah, totally agree. And that's very refreshing sometimes to see in this world. And I know that probably many of you listening to this, you're not that familiar with Singapore. Maybe you've never been. Um, but yeah, quite interesting to see how horrible the decision making can be in some of the Western countries, and how yeah, I don't think Singapore gets it right all the time. I want to be very clear. I've also been quite vocally unhappy about some of the lockdowns we've seen last year. But then I think just right in time, Singapore addressed that and navigated everything through. And at the moment, I'm 10 out of 10 happy. So really, really good. Yeah, so I thought quite interesting kind of development there. So yeah, a few other things before we're gonna dive into the market. One thing, I will be speaking at South by Southwest next year. It would be really awesome if you would support us by voting for us to speak there. So I'll link it up below. Please go there, spend 1 minute, vote for us. Would be really, really helpful. Let me just actually retweet that. Great. So that this is done as well. A very, very key blog post I want to point out is that C DeFi blog post. It's that really sweet spot explainer on what makes Cake DeFi so different from Celsius. One of the questions we get so often from like customers: can the same thing happen to you that happened to Celsius? And the straightforward answer is no, for the very simple reason: we're not a black box. We're completely transparent, just like a DeFi service should be. However, we are a centralized and regulated platform, hence CeFi, and we are mixing the best out of both worlds here together. That is also, so have a read here. That is also why we can have that transparency page where, I mean, we're publishing those transparency reports, but you can actually see for all our services completely transparent where the rewards are coming in, partners, trusted links, and so on. So you can see all this below. Have a look. I hope that really builds some trust and yeah, via the transparency route. One other thing, if you haven't watched it, watch my interview with Mr. Money TV. Yeah, big fans of them. They're just across the border in Malaysia. Nice video. They came over, visited us here at the office, and yeah, I think that was really great. One last thing, I think it's last thing. Yes. One last thing I just want to point out here before we then go a bit into the market. Please be super, super careful. I'm going to remind you several times. We do not ask for 2FAs. Please be careful for like fake moderators on Telegram, phishing. Like, it's the biggest thing when we hear from people that they feel that something is wrong. It's always that they had some phishing attempts done to them. So don't give out your private key. Don't give out your 2FA. Don't give out your password, right? I mean, seriously, not a single one of our team members is going to ask for a password of yours. That's absolutely ridiculous. No 2FAs. Like, it's so, so, so important. We are like doing everything left and right to make sure you are protected. But yeah, so it also takes your partaking. So just a quick reminder on that. Yeah, that's really key. That's it a bit from the updates that I have for you at the moment. So I'm gonna jump actually into the markets, and we're gonna discuss a couple of things. And what we are gonna start off with is actually a discussion that Brian Armstrong from, where's he? Coinbase had. Let me pull that up here. And it was, yeah, just put it down. I always feel like I'm the doorman here because my office is right at the entry, and people always feel like I need to open the door, but they just have to put their stuff down. Brian Armstrong had this really interesting interaction on Twitter, and I just want to kind of explain it basically, and then we'll kind of have a bit of a discussion on this because I think that's really relevant. And the question that becomes, would Coinbase stop the staking, or would they risk being regulated or actually being shut down if there were transactions that are sanctioned transactions? And this entire topic obviously came up with Tornado Cash. We kind of had discussed this a bit last week, and now this has really kind of gotten some momentum. Some people have actually then called for the merge not to happen because they're like, hey, this is really, really dangerous. Brian Armstrong came out and said they would then stop staking, and they would not kind of go this route for them. And then people jumped in again and said, you see, but this is the real problem with staking. And I want to address this as well here. Let me open another screen here. And actually want to point out a few things that this is actually happening already, where we do have, for example, with mining already, where we also had this in Bitcoin. So this is nothing specific to Ethereum. We actually also had this in Bitcoin, where Bitcoin miners sanctioned transactions. I think in that specific case, then this became a stale block, and it was reorged with another block. But this also happened on Bitcoin. So on Ethereum, we also have this Ethermine in this case, largest Ethereum miner. It's not processing sanctioned transactions, right? Big thing. So this should not have much of a change with the staking. And another interesting picture that I want to bring up here, Brian Armstrong then posted that, which is a regulatory kind of framework where he says, look, something may not work in the US, but it may be fine in another country. Obviously, if you look here at Singapore, yeah, a lot of the staking part should be should be fine here. Yeah, you look at the US. I mean, yeah, it's really lacking a bit on the crypto framework that these concepts don't really work. So there should be enough diversification, and so the point then becomes Ethereum switching over to staking. Is this actually a risk? And I'm going to share a few thoughts on how we are going to approach that at Cake to really support that ecosystem there and make sure that we also on our side are going to support a bit Ethereum. But first, yeah, I want to hear a bit of your thoughts, Glenn, if you have any on that. What are things you looked at? Yeah, and let's discuss this a bit.
Yeah, I think it's a super interesting position because there was a report from JP Morgan that looked at the impact of Coinbase on ETH staking. And they said, well, Coinbase can have up to 50% or even over 50% of the total ETH stake. And they could probably make 625 $650 million off of this on an annual basis. So if you're Coinbase, like, it's going to be a very interesting discussion if the regulator comes and says, okay, you need to censor some of these transactions. Will they comply? Because it's a big part of the revenue. But if they do, then how will the community react, right? I think that's the main point. So will they get slashed? Will there be repercussions, even given their size? They probably need the money because their Q2 was not so great. Their Q1 was also not so great. So they're in a position now where volumes have dropped considerably on the exchange. And I think they need revenue sources. So they've been offering ETH staking since the beginning of the month to their institutional clients. So they're really going after the big funds, which is smart. But yeah, they're going to have to make sure that there's a business there. So a bit of a double-edged sword for them, I think. What are your thoughts?
No, I mean, I agree. I mean, a couple of things you can do. Obviously, you could spin out that entity and just remove that from the US and put it somewhere else if you want to be extra cautious on that, if you really wanted to. Other option is yeah, I mean, just maybe exclude US customers. One thing that we at Cake are definitely going to do is we're actually not going to rely on anyone else with the staking. That's going to be a very tricky one for many other platforms, and I want to really kind of highlight that to you as a customer. If you as a customer are using a platform for Ethereum staking, just be really aware on who is this platform using at the back end. Are they completely transparent about it? Who's the infrastructure? Is there any kind of risk there? Because in theory, I also want to kind of explain that. And I made an English video once on my personal channel to kind of explain that to people. What would happen on proof of work? And proof of stake is exactly the same in that regard. What would happen in proof of work if back then what the example was if the four largest Bitcoin miners, they all sitting in China. Imagine the Chinese government came and just said, you know what, all four of you, you're going to collude, you're going to run a 60% attack on Bitcoin. The most profitable thing on this case is just, or the most impactful thing is just kind of censor, right? So no transactions being processed because everything else is not really kind of it's not so meaningful. So what would happen? Because imagine the Bitcoin blockchain would just produce one empty block after another. And actually, most people don't really understand what would happen. They always think, oh, this could not happen. A 50% attack doesn't happen. Or if it happens, they all talk about a 51% attack with a double spend or something. Actually, games theoretically, all this is completely like whoever tells you that this is what would happen is very unlikely. The most likely scenario is pure censoring, right? So it's just censoring. So what would happen? Well, what would happen is the remaining network, and it's actually mainly the nodes, right? That's why it's so powerful to have a node, could then go and say, you know what, we're not going to accept any blocks, even though this would be actually valid blocks. We're not going to accept any blocks from those four miners. We're just not going to accept them. We're only going to accept blocks from very specific miners. And so this would happen relatively quickly. And so the network would then immediately fork, and you would have a longer chain that would then actually get rejected. So it would be against the consensus, because the traditional consensus on Bitcoin or say Ethereum and DeFi chain and so on is always you take the longest chain because in the longest chain the most work was done. So this would just get artificially rejected. And so the same could happen on Ethereum. Imagine it this way. Imagine Coinbase starts censoring transactions. And then the community forks Coinbase out, completely forks them out. Here's the dangerous part. This is the stuff that you really have to be aware. Forking out on Ethereum would then mean, and this would be dramatic, is different as in proof of work. In proof of work, all you lose, and that's where I think sometimes proof of work versus proof of stake doesn't get enough debate kind of quality, is actually more harmful in proof of stake because you actually lose your coins. You get completely forked out. So it's different as in proof of work where you still have the miners, all you burned was the electricity. Here you lose all the coins. So obviously this would be a massive step. I'm not sure if the community would actually take it. But so you as a staker really should consider who are you staking with and how much is this entity gonna have to abide to certain sanctioning rules or not. And obviously I also want to be very clear. I have not heard anything from MAS here in Singapore about like adding or not adding such transactions. And I also want to be clear, if we have to stick to a certain law in Singapore, we will stick to the law here in Singapore. I want to be very clear on this. But what I can also assure to you is that our entire infrastructure that we are building up for the staking is going to be our own infrastructure. So we're going to run our own nodes. We're going to be in full control. We're not going to be mixing funds from other platforms. So this could also obviously be risky, right? And so the reason I'm pointing this out again is that I believe that some companies, some platforms, also some users are going to take some shortcuts on certain things, and this could bite them a bit in the butt. Hopefully not, but I just want to point that out.
What do you mean
And so,
shortcuts? Like, elaborate a bit. What could they do?
shortcuts would simply be that they would use some other infrastructure, right? So you piggyback. So it's like a white labeling of the node infrastructure.
Yeah.
It's fine to white label a tech infrastructure, right? You can white label tech, but if you actually white label the node infrastructure, and we see this a lot on many, many platforms. Recently a lot of Bitcoin platforms got into a lot of criticism because they simply white labeled actually regular crypto platforms and just removed all the features and just left Bitcoin left over and said, oh, we are a Bitcoin only platform, when actually what they basically did was they just cut out all the other coins and got a lot of criticism for that. And so the danger here is you white labeling actually nodes, and you make it seem like you're doing it all yourself, and then you just get mingled with a lot of other stuff, and you don't at the end really know what is really going to happen. So you're lacking the transparency and all that. So Coinbase is definitely going to run their own nodes from everything that I would understand, and I would assume the large platforms also do that. But just be sure. I think the question I would just ask the platform is: are you running your own nodes? Are you mingling them with any other platform? Under which jurisdiction are you? I think that's relevant. And if you want to be super safe, then diversify a bit, right? If you live in Europe, diversify to the US and Singapore. If you are in the US, diversify to Europe and Singapore. A lot of people use Cake because they love that we sit in the Switzerland of Asia, and I think that makes a lot of sense. So,
Yeah. And
Glenn. Sorry.
yeah, we were talking about today. The discussion has been mostly black and white, like will you accept or will you not accept? But today, I think we were talking about what are the risk frameworks that we want to put in place. Like, what tolerance level do you have for, let's say, tainted transactions in these blocks? What percentage are you willing to accept as a platform? Is it below 2%, 3%, 5%, 10%? So depending on your risk appetite, you can kind of go a certain way. But it's important that I think every platform establishes what is their direction, general direction, but also from an implementation perspective, like how will you operationalize it, right? Like what blocks do you accept and which ones do you not? So I think that's a key question.
Yeah, very valid. Any other thoughts you have there? Otherwise, we can move over to Tether.
No, maybe just a final question. So what do you think Coinbase will do? From your perspective, what would you do if you're Brian Armstrong?
Just what Brian does. Nothing else, in my opinion, that he can do. Sure, he can spin up another entity outside and I don't know, do something in Cayman and service his customers, like some customers staking from there. But at the end, you have to abide by the law. Makes absolutely no sense for a company not to abide to the local law,
Hmm.
and it's just as it is right now. I mean, sure, it sucks they're losing some revenue on that, but then also, I mean, they didn't have that revenue a month ago, right, or 2 months ago. So
Yeah, fair enough. Although 1 billion loss in the last quarter, so I don't think he would mind getting a bit of extra revenue stream. But okay, that's a different story. But yeah, it's a difficult one.
absolutely insane to see that. With Coinbase. Yeah. Um, Great. Let's bring up another topic, and that is a very hotly debated one. Some people don't fully understand the topic, or yeah, describe it a bit differently. And it's an entire topic around Tether. And Tether, obviously, most of you probably know that, is this private company that issues USDT, has been always kind of criticized for them not being transparent about how many assets are they actually holding. And it's just been a constant kind of discussion. And so Tether now came out and said they have one of the largest auditors, BDO. They are in Italy in this case, not auditing their books, but having an attestation. I want to be very clear what an attestation is. And I highlighted that. An attestation means that it's just a snapshot. An audit, for example, and I noticed so specifically because we at Cake DeFi underwent a PCOP audit. That means it's by the PCOP standard. It's a full audit, so everything, basically every transaction, every action that's happening in the company in 2019, 2020, and 2021. Also, we're gonna be audited for 2022. Is being gone through. So it's not just one day or one instant, it's everything. And it's everything from a financial standpoint, from a governance standpoint, from a risk standpoint, compliance standpoint. I mean, literally anything you could imagine is being checked here. So an attestation is, in comparison to an audit, it's like, I don't know, having a little rubber car versus, I don't know, a Saturn V rocket. That's like the difference, really. It's like night and day. You cannot imagine the difference between, between an attestation and an audit. But still, the attestation was now done by an Italian firm, not by this really kind of sketchy, I think, Cayman company that no one really kind of was aware of. So that was really good. Obviously, the attestation came out correctly in this case. It's off June 30th. And some of the key findings were that, about, I would say, two-thirds, so about 44 billion of the 66 billion issued USDT seem to be completely liquid. Obviously, you would have to trust that attestation. I don't have much doubt not to trust the attestation, so I think that's fine. 44 billion are instantly liquid. The reason it's only 44 is because that commercial paper here with the certificates of deposits that are about 8 billion, it's difficult to kind of gauge those. So I would just not remove, I would remove them from the total cash and cash equivalent. I'd put them further down. But then probably another 10 to 12 billion should be relatively safe. Obviously, a big question here is what are these other investments? Secured loans is very tricky to understand. So, I think 44 billion really, 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 really liquid. And then of the remaining 22 billion, maybe half of them should be fine. Should be fine. The other half, the other 11 billion, you don't know. To me, and I made that conclusion on Twitter as well. Obviously, it's very difficult to kind of now say, is USDT safe now? Should you use USDT instead of USDC? Because also USDC had some criticism in the past. And it's very difficult to kind of give generalized statements on that. But for me, obviously, this is a step forward. So this is a step up. And I think it's very unlikely, if these numbers are correct, that Tether would ever have any liquidity issues. Because even if the last 11 billion don't exist, so let's say the last 11 billion don't exist, it's so unlikely that 55 billion USDT would get converted into dollars. I mean, it's just super unlikely. But then, of course, it's not like a final kind of sign off. I would love to see some proper audit. They're going to do some monthly attestations now. I mean, this is all really nice. But at the end, what we really would love to see would be a proper audit. And hopefully they can provide that at some point. So this is a bit of the thoughts here. Glenn, thoughts from your side?
So let me preamble by saying I'm a skeptic. So I was always a skeptic of the whole setup, the team itself, their claims, the audit always being 6 to 8 weeks away for the last couple of years, running joke. So Tether as a whole had always a lot of question marks. Even if you Google, so I was doing some research obviously for tonight. Even if you Google Tether, the first link is a sponsored link by Seeking Alpha saying Tether is a fraud, like it's a $70 billion fraud. That's literally the first clickbait article you see. So I think that kind of captures the sentiment of the market, maybe general retail. But I have to say the attestation was kind of an important step. BDO is not a small firm, right? So let's be honest. This is a big audit firm. They will not necessarily risk their reputation, even if it's BDO Italy. I don't know what that means in terms of have they been shopping around and whoever wanted to take them on. But the numbers, an attestation is literally, I say that I have X and I show you a document or I show you proof that I actually have X. So kind of validating the statement that they have. And so that's an impressive feat. If they have that money available, then indeed, I agree with you, then it's going to be very hard to destabilize them. And they even said that 8 billion, slightly over 8 billion in commercial paper, they want to reduce that to 200 million, I think, in the next quarter. So they're really going to have more than $50 billion in liquid assets to support USDT. So I think as a market, I think we should take it as a positive sign, very positive sign, even as a skeptic right now in this bear market, knowing that USDT is probably more solid than all of the FUD that's been out there. I think was a very positive takeaway for me. So yeah, big plus.
Definitely. And it definitely doesn't seem as if the market had any negative or positive reaction because of that. I mean, market is down. It's been quite dramatically down. There was this meme here on Bitcoin getting slaughtered and slaughtered and slaughtered, and now it's the next door, and Bitcoin's getting slaughtered again. We're knocking at 21,000 something. I don't know, Glenn, how much are you following the markets? How much are you following the day-to-day price movement? Obviously, when Fabio and I talk, it's always a hot discussion. I'm definitely not someone who follows that on a day-by-day basis. I don't know if you had any kind of thoughts into this. Also, maybe, I don't know, other thoughts. I mean, Tether should have stabilized the market. There's not a single reason on actually from a crypto perspective that could have caused that sell-off. So I don't know if you've been following this much, having had thoughts. Yeah.
Yeah, I was fully convinced, like let's say a month ago or so, that probably the bottom was in, and that we would have at least a couple of months of stable waters, a bit of rise. Didn't expect Bitcoin to go to 40,000, but also didn't expect it to dip below 20 again. So if this continues, and on your chart, I think it was quite interesting. There's still quite a bit of space to go. So if you look at the deepest cuts, we're still away from that. So there's still another 10, 20, 30% potential downside again. So it's a tough one. I feel like I need to follow it on a daily basis, but it's not enjoyable to follow it on a daily basis. So I hope that at least it stabilizes a bit. But what is the reason? Do you think, like, any explanation from your side?
Why don't, I mean, it's always normally Fabio always starts, so I'll let you start as well. What are the things that you have seen, researched, heard? Then I add what I seen, heard, or yeah.
Yeah, I think it's if we start in the US, obviously, and we're going to talk about housing, I think, in a second. But continued inflation all across the board, I think, is continuing to drive liquidity issues. So people probably seeing their housing loans continuing to rise in interest rates or continuing to stay high, costs staying high, people getting laid off. So I think it's more of a macroeconomic impact here that we're seeing both in equity markets and in crypto, continuing to face liquidity. We'll talk about the NFTs in a second there, but there's every dip has casualties, right? Let's not forget that. So every dip has people that then dip below their margin calls or dip below their cost basis, and then that means that they need to do something forcefully or against their will. So I think it's a general sentiment where the market has lost so much that people at this point maybe have no other choice. So it feels like we're really on the bottom, I would say. I'm hoping that we can stabilize a bit to save the rest. But yeah, I think that's my take.
Yeah, one chart that I found was quite interesting is the US dollar index. US dollar index has been incredibly strong. We just kind of went over that June, July kind of high that it had made, and it's pushing through. And yeah, since all these assets are priced in US dollars, if yeah, the denominator is going up, then that means the total numbers going down. And I think that together with probably just some excessive hopium, some excessive leverage, some excessive risk for this uncertain time, I think both of that caused at the end, yeah, the market to really then have this dramatic sell-off. I mean, I think Bitcoin sold off by 14, 15% over the last 7 days.
Yeah.
Some of the altcoins, 20, 25%. Yeah, I think Bitcoin sold off okay. DeFi chain actually did really well in the last couple of days after not doing so well in the weeks prior. But over the last couple of days, I think there's some hopium coming in that the USD topic is going to get solved in September with some of the forks. And Ethereum, after having rallied for over 100% in July, August, now also sold off the most. So it's been, yeah, I mean, definitely. And I mean, the total general market's also sold off. So I think that's probably the main reason. I saw some of the, I don't know if you've been following that rumor about Mount Gox kind of liquidating their coins and dumping the coins in the market. But from everything, and I mean, I can share this because u-zyn shared this publicly. u-zyn, my co-founder here, CTO, is also part of that entire Mount Gox liquidation because he also had coins there. So that also tells you how long he has been in crypto. And yeah, as far as I hear, this is going to take quite some time. So this should not. This sell-off is very unlikely to have been caused from anything crypto specific. I think it's really the fears, the uncertainty. People are still forgetting that the patient is sick. Just because right now we have some symptomatic treatment doesn't mean that the patient is getting healthier. Patient is still really, really sick. And yeah, it's just a bit of a reminder there, I would say. Yeah, I think one big topic is housing. We can bring this up. I think it's I really think it's pretty much a bit of the scary kind of part at the end of the road. And it's something that I, as an investor, really kind of pay the closest attention at the moment. There was one news this week that really scared me a little bit, which is for the very first time in 15 years again, a US mortgage lender is going broke. And the reason this is really key is because at the end, that was what kind of started the great financial crisis at the end then 14 years ago. And so obviously that's a big, 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 big topic. We hear about sales prices dropping, sales slowing down. It's yeah, obviously something to really watch out for. I think it's very regional, to be honest. I think in Singapore we don't see this at all right now. I looked at the numbers again. I think Europe is very sequestered. Some have strong growth, some have drops. US obviously is also, I mean, different markets, but to me, if that real estate market comes down in the US, I think that's the really scariest part about it all. Glenn, thoughts, research, what did you look into?
Yeah, flashbacks to 2008, right? Freddie Mac, Fannie Mae. This is kind of how it started. And sure, these were big players. So that was different because that was a wholesale collapse of subprime loans. But yeah, like if dominoes start to fall, we're seeing a housing crisis in the US. We're seeing a real estate crisis in China. We're seeing Europe very mixed. And sure, there's pockets, UAE and Singapore, that are probably doing very well at this point. Or I don't know if rising prices are very good for the tenants, but at least for the owners, their value is going up because there's more influx of capital coming from Hong Kong and other places. But yeah, US and China, those are really, really big real estate driven debt bubbles. So if those start popping, and China has been having these issues for the last few months, and if the US is also going the same way, yeah, the next year is not going to be pretty because then there'll be a lot of foreclosures and a lot of difficulties. So let's hope not. But yeah, it's a blip.
I mean, that is also always my when I say favorite scenario, it doesn't mean that this is the scenario that I want to have. But if you're asking me on, okay, of all the possible outcomes we can have, what is the scenario that I think is the most likely. So maybe I should use the most likely scenario. To me, the most likely scenario is actually we're going to see a bit of a recovery this year, especially Q3. I think Q3 is going to be actually relatively positive, I think. And again, I don't know, would be interesting also to get a bit of your insight. What do you think from the tech companies? Because so far we have only seen hiring stops on the big tech companies. Obviously, the crypto companies have laid off massively. Tech companies haven't. The big five, the big six haven't yet. I think we're going to see strong growth in Q3. Strong. We see like sufficient growth in Q3. No recession anymore, officially by the whatever terms that we have decided. People are all really glad. Going into the midterms. Then the Q4 is going to bring us back to reality, and then Q1 to me is when we kind of get the kind of rug pulled out behind us. I don't know. What do you hear from friends back in other companies?
Yeah.
That would be interesting to hear as well.
Yeah, I don't know if you saw like advertising results for Snapchat and for Twitter, for example, down quite a bit, starting to look a bit bearish for those companies, definitely. So they are definitely feeling the impact of the general market going down. And so I think layoffs and cuts will not be too far behind. If we see tier 3, tier 2 tech companies have already done a few rounds, have already downsized, have already maybe shut down a few locations and brought people back into a couple of office spaces. But layoffs will continue to happen, I think, like the next 4 to 6 months, end of this year. A lot of people will become unfortunately unemployed, I think. So what will that do for the whole crypto market? What will that do for the whole equity market, housing market? Nothing positive. So it's a bit, I don't want to be the doomsday angel or whatever you call it. But I do think we're going to have to go a bit deeper from a unemployment perspective in many different markets. Things are not looking that good, I think.
Yeah, sadly. Yeah. I mean, and I had this discussion with a friend of mine here in Singapore the other day, who then asked me, what's the solution to all this, right? And I said, look, I really think what people tend to forget is that for almost 2 years, pretty much the entire world had like 10 or 15% of the entire economy running, and 85% was just financed through printed money. And that's at the end what caused 2020 and 2021 to be such insane markets. And now in 2022, people sit there and think we can party like crazy for 2 years without repercussions.
Yeah.
And now we're having these repercussions. And I think people just don't want to admit that, or they don't want to accept that, right? And I think the Fed is in this really tricky situation where they had this asset price inflation, and people need to really learn to distinguish. There's API, which is basically an asset price inflation, and CPI, which is consumer price inflation. Two different things, right? And in 2020, especially then 2021, we had this API, asset price inflation. I mean, stuff just went through the roof because there was so much liquidity in the market. And then at some point, the Fed came in and said, hey, these assets, people are starting to sell those, and they're actually going to buy lifestyle credits with them. They're actually going to spend that, which is going to cause consumer price inflation. So now you're the Fed. What are you going to do? Well, what the Fed did was bringing asset prices down because they need to try to get money back from those people who have been making so much money. The issue is a lot of the very wealthy people already got out, and the bag holders many times are actually people who shouldn't be the bag holders during these times. And then at the same time, the Fed needs to get the CPI down, because otherwise it's people losing money here on their assets, but their cost keeps going up. And that's just really, really, really dramatic as a whole. And so I told my friend, and I said that the actual solution always comes down to people not wanting to be productive anymore. People wanting to retire, people like saying, hey, you know what? Hey, it worked for 2 years. I got all this free money for 2 years. I didn't have to contribute to the economy, to the ecosystem. Why can't I not keep doing this? And you see this a lot, right? And that's the fundamental issue. The fundamental issue is that people just want to, they want to retire. And I'm not talking about people who are 60 plus who want to retire. I'm talking about 40 plus who sit there and say, well, I worked so hard. I got all this money. I just want to retire. And people then just tend to forget that if everyone thinks that, it's just really, really difficult. And so I think that's the difficult situation that we're in. What we actually would have to do is we would have to kind of force people to become productive again. But the that you can't force them. So you kind of have to have this, well, kind of pain mechanism, because the incentives don't seem to work. You kind of have this pain mechanism for the world to become productive again. That's a bit of how I see it. I don't know if you see this differently.
Interesting. I think there's a lot of interest in flexible working these days. So a lot of people who have been execs in big companies, who have had a nice career, just at this point, they want something more flexible. They don't want the office life anymore. They want to work from home, or they want to work from Bali. Bali's done a great job. Like they said, hey, visas for everybody who wants to work here. Come set up shop, come do your own coaching business online, come do your own e-commerce, whatever you do, it's possible from here. We have internet, we have food, we have beaches. So come on over. So I think that's what people have also realized probably in the pandemic last two years, like, okay, maybe it's time for a change, shake up the traditional career. Okay, I want to get out for a little bit. So I hope that it's a temporary phenomenon, that people realize at some point, like, oh, maybe the money runs out, so they have to go back, or they feel like, okay, now I want to be back, part of a community in an office, really like collaborating and working instead of doing something on my own. But, with family, you can just pack up these days, and kids can watch videos online, be educated online. So in that sense, things have just become more flexible. So I think what we're seeing is probably a sign of the times at this point. Can I work from Bali, by the way?
Yeah, no. We have a hybrid model. So for us, it's work home and work remote. Did you see that Apple announcement about wanting their employees coming back 3 days a week?
No.
And then there was this entire kind of employee kind of movement about complaining that they don't want to come back to the office, and
Oh,
they were like
really?
all complaining against Tim Cook and everything. And I just sat there and I'm like, yeah, exactly that, right? So exactly that. um the big scary thing is when, like, when really there are productivity issues, and then, like, when these big tech companies have to actually downsize, right? Not just stop hiring, but actually downsize. I don't know. That to me is when it gets really scary, because then suddenly you have like hundreds of thousands really, really talented, skilled people that need to work again. And yeah, I just thought when I saw that in the news, I don't know. I think it just came out yesterday or this morning, and I was like, wow, that's crazy. Like I made this joke on Twitter where I said, Elon Musk said he has a hybrid model, 5 days a week. You have to come to the office, and you can work remotely on the weekend.
I mean, that's kind of been the model for the big tech companies, right? So, I mean, I can only speak for LinkedIn because I worked there. So they had a very nice campus in Sunnyvale where any engineer who is good enough, or maybe the ones that they could actually afford, because Google, Facebook, all of the big ones are offering crazy salaries. People just come live there. Like, it's a campus where you have 3, 4, 5 restaurants. You have a gym. You have barista. You can cycle around. Live nearby. So it's almost like you come live in this community. So for those folks, maybe that still works. But what percentage of the population are we talking about, right? So this is like the 0.01% that are living the life in one of those tech campuses. But the others, yeah, it's a bit more difficult. But even for those engineers, I think, if they could work from somewhere else, or be back in their home countries, for example, or work from another location, not have to be in the office, I think a lot of them might still prefer it. So we might also just continue to see resignations and people just trying to do flexi work at this point.
Yeah. Let's see. It's gonna be quite interesting. Cool. I think we went through all the topics. Let's. I think the NFT part. Let's scratch that. Be respectful. I think we walked through everything.
Yep.
Anything that you feel we should have added, left out? Any roles your team is hiring for?
Oh, yes, many. So we are especially looking for data-focused people. So if you're a data engineer, or if you can help us build up our business intelligence function, definitely interested. Expanding our KYC, KYB capabilities. So if you're interested in doing more research type of work for compliance, definitely welcome. We're still expanding for HR. We're still expanding for marketing roles. So yeah, just check the LinkedIn page or the website, and be happy to take any resumes you have.
Awesome. Yeah. Go to cakedefi.com/jobs. CMO, VP people, engineers, always compliance. I mean, just have a look there. We have quite a lot of roles open. We're one of the few companies left hiring. Yeah, so it would be great to have you on. And obviously, if you're not a customer yet, I don't know what you're waiting for, then go to cakedefi.com, sign up, and yeah, get cash flow on your crypto. That would be great. I hope you got value out of this, Glenn. Really appreciate it. We should definitely do this more often, even when Fabio is on holiday. Otherwise, we could just do also like a three-way. Him, you, I, different topics. I think is
Can.
I think a good combo.
I enjoyed it. I'm not sure if people enjoyed me replacing Fabio, but okay, that's a different story. But this was a lot of fun, so let's do it again.
Yeah, let us know on Twitter. I think would be a nice dynamic with Fabio, Glenn, and myself. Let us know. Doesn't always have to be three people. It can just be. I mean, it depends. Sometimes we don't have enough, I think, to discuss, and then sometimes we do. So yeah, would definitely be great. So yes, with that, I wish you all a really nice Tuesday. Thank you so much for tuning in. If you're listening on Twitter, remember, please follow, retweet, share. That would be great on YouTube. Click the subscribe button so you don't miss out any of the good stuff with the bell icon on the podcast. The same thing, and obviously leave us a beautiful review. That would be super nice. So yes, with all that, thank you so much, everyone. Appreciate it. Stay safe, stay healthy. All the best. Thank you,
Thanks,
and
everyone.
bye bye.
Bye bye.